Hi, I'm Patu from freefincal, and today I want to discuss the results of a very interesting study of how we sense risk in investing a lump sum in the stock market. So, I had conducted two polls in Facebook group Asan Ideas for Wealth, run by Ashal Jowri, and people reacted to it extremely differently. The question was essentially the same, but the way in which I posed the question made people vote very differently. So the first question I asked was, kindly participate. I have rupees 5 lakh and wish to invest it in equity. I am not worried about the current market conditions and as my need is long term. How should I invest? I had given them two options: invest it in one shot and invest it gradually over a few months. Now, gradually over a few months need not mean an STP. It can be manually, or every week, every month, or whatever. Please recognize systematic transfer plan is just a way for AMC to lock your money, and there's no real benefit for the investor. So when I said this, 87 people voted for immediately in one shot, and as many as 258 people, that is 75%, more than one third majority, for gradually over a few months. This is normal, because when I say 5 lakh, they say, oh, 5 lakh. Oh my god, what will happen if I put 5 lakh and tomorrow the market crashes? So that's how people think, and that's a very natural, normal way of looking at it. Now, please recognize this is purely psychological. The STP does not enhance returns. STP does not reduce risk in any way. Mathematically, there's no benefit for long-term investing for investing a lump sum via STP. It is purely psychological, and there's nothing wrong with it. Absolutely nothing wrong with it. I'm not talking about that. Now, I posed the same question in a different way. I said, today I started a poll about investing in one shot versus gradual investing in the market. I realized I did not phrase it right, so I would like to start a new poll. Kindly participate. I have an amount with me and wish to invest it in equity. I am not worried about the current market condition and my need is long term. The amount is less than 3% of my net worth, and it is about 6% of the equity holdings currently in the market that I have invested in the market. How should I invest? Now look at this. 116 people said immediately in one shot, 131 said gradually over a few months. So basically now it's almost become 50-50. Earlier it was 73% for gradually over a few months. Now it has become 50-50. Why? Because they are now looking at that 5 lakh as a ratio. 5 lakhs divided by net worth looks small. 5 lakhs divided by the money in the market looks small. Then they say, okay, it doesn't matter, because you can invest in one shot. Now, please recognize that when I say 5 lakh is about 6% of my equity holdings, it means I have 80 lakh, more than 80 lakh already invested in the market, and my net worth is like 160 lakhs, that's like 1.6 crores. And for a person who has got 80 lakh already invested in market, why should I worry about the 5 lakh I put in? Because tomorrow if the market crashes, the loss I'm going to get from that 80 lakh is going to be much more than the loss I'm going to get from that 5 lakh. That is how people thought, and that's in my opinion the right way to think about it. And for a person with 1.6 crore net worth, it's really nothing, right? And for 80 lakhs in the market, just over a few days, if there is a continuous loss, 5 lakh will be lost. So there's nothing. There's no need for me to invest and then lose money. I would have already lost it. So that is the right way to think, because when you talk about the market, you can't just gauge whether the market is overvalued or undervalued by looking at the price. You need price divided by earnings or price divided by book value. So you have to look at it as a ratio. High or low depends on a ratio. That is the, I think, the right way to look at it, in my opinion, or that's what I would do. But still, little more than 50% have said I will still invest gradually in one shot, even though I am a crorepati, even though I have half my net worth in equity, I will still invest 5 lakh in one shot because of regret. That the cognitive dissonance. There's no, I mean, even though the facts are saying something, they think in a different way, because there's that regret, because Tomorrow, if the market crashes, I invested 5 lakh and the market crashed. I should have not done it. I should have invested it gradually. Why did I invest 5 lakh in the market in one shot? That regret will always be there, and that regret is what causing people to vote, even though the money is actually less. It is not really a lump sum. They still want to invest it gradually over the market. Now this kind of so there's nothing right or wrong about this. Who am I to judge what is right and what is wrong? But the point I want to make is that we must learn to gauge risk in the right way, and we must understand what is high risk and what is low risk, and get used to losing money in the markets. In fact, I tell people in my investor workshops, you should be ready. You must say, I'm going to lose lakhs every day. I'm going to be so rich that I'm going to lose lakhs every day. That's kind of mentality we must gear up for. And once we do that, and once we look at risk in the right perspective, it becomes a lot better. Of course, gradually investing in over a few months makes no difference. It's really not a big problem. Go ahead and do it. But the point I want to make in this video is two things. One, when people look at 5 lakhs in the right perspective, then they change their mind. And still more than half the people, even though 5 lakhs right perspective, they still want to invest gradually over a few months because of that regret. I mean, they don't want to face the consequence of a loss, and the regret of their actions weighs in on them. And I think that regret should go away, because I think it'll stop us from becoming successful investors or focused investors. So this is a very interesting poll. I think it'll help advisors also to understand their client mentality. These kind of questions help us understand our risk appetite better. Risk appetite actually is essentially a measure of risk ignorance, how much we are ignorant about risk. And this is a tool that I'm developing a set of questions for gauging risk appetite. And this will help us. This poll will help us understand. I mean, help me and help you hopefully in understanding risk. So, if you have any questions or comments about this, please leave them below. Thank you for watching, and I'll catch you again in another.